Hi, everyone. I wanted to do a quick video here. There's a few slides at the beginning of chapter 4 that on the recording that's been posted to Canvas. The beginning slides aren't there. So I wanted to go through a couple of quick things that are important for chapter 4 and then also remind you that you should be working on your midterm this week. But what I want to do first is just look at the risk assessment process on these slides. Okay, risk assessment, very important in auditing. What do we do? Auditors want to make sure that they're giving an opinion on the financial statements, and they want to make sure that that opinion is the correct opinion, or they want to do their best to give reasonable assurance that they're giving the correct opinion. So what the auditors do is they look at something called audit risk, and they say, what's the risk that I'll give the wrong opinion? What's the risk that I'll say the financial statements are free of material misstatement when in fact there is a material misstatement in the financial statements, audit failure essentially? Well, when auditors look at that, they look at a combination of two, but really three different risks. We look at the risk of material misstatement, and then we look at detection risk. Now, the reason I say it's really three things is that you can take the risk of material misstatement and break that into inherent risk and control risk. Okay, so that's what we're looking at on this slide. Okay, inherent risk is a risk associated with a financial statement item that the auditor cannot control. For example, cash has a high inherent risk. Maybe things like fixed assets have a lower inherent risk. Okay. Now, what happens? Management is supposed to put internal controls in place that'll prevent or detect a material misstatement from occurring and being included in the financial statements. That's management's responsibility, but it is the auditor's responsibility to assess the inherent risk and the control risk. Again, those together constitute the risk of material misstatement, and then design audit procedures that will lower the overall audit risk accordingly. Okay, so when we look, we have to think about, well, what do we mean by misstatements? Okay, and there are really three types of misstatements. There's a factual misstatement. Factual misstatement means there's no doubt. We went and we tried to find a fixed asset, let's say, and when we look, we found that the fixed asset did not exist. Remember, we talk about assertions all the time, right? Then we have what? Then we have judgment misstatements. Okay, and this is different. Difference, a likely misstatement is differences between the auditor's judgment and management's judgment. Management says that a fixed asset is going to last 10 years, and the auditor looks and says, hey, maybe you got 3 years left on that thing. Who's right? We don't know, but in the end, the auditor has to trust their judgment, and so the auditor would ask for an adjustment in the financial statements if that amount was material. Finally, we also have projected misstatements. Projected misstatements are based on sampling, and we go ahead and we take a sample of items and we project the misstatement. And we'll talk about sampling in some upcoming chapters here after the midterm. And we go ahead and project that misstatement. Okay, there's always a chance that a sample will not be representative of the population. And so we have a projected misstatement. Okay, so we have factual, we have likely misstatement based on differences of judgments, and we have projected misstatements. Okay, so let's go ahead and take a look at a couple of questions. And when an auditor is assessing the risk of material misstatement, auditor evaluates the reasonableness of the accounting estimates, and an auditor normally would be concerned about assumptions that are, and you can see the answer, subjective to bias. Okay, if management has some bias that is causing them to maybe increase revenues, decrease expenditures, increase net income, the auditor would be concerned about that, right? These others would probably be the opposite, would give the auditor some level of comfort with the estimates that are being used. Okay, which of the following is a factual misstatement? A fixed asset being recorded at the incorrect cost. these other ones, management's estimates that is outside the range of reasonable, this becomes a likely misstatement, differences in judgments. A projected misstatement, as we've said, is projected. And then differences in judgments, again, is a likely misstatement. The only one that is factual is a fixed asset being recorded at an incorrect cost. Or you go and look for the fixed asset, you can't find it. You send out a confirmation for accounts receivable, and it comes back and the person says, no, I don't owe that amount. And you determine, yeah, that's correct. That amount wasn't owed. Those are factual misstatements. Okay. So again, when the auditor is going to make the assessment of risk, the auditor is going to consider their own business risk. Of course, the auditor needs to be profitable in doing this, and we don't want to get into a situation where we're going to not be able to be profitable in an audit. So there is that business risk consideration as well. Okay. Now, I think the recording that is currently in place goes through these slides. These are important phrases. And in the recording that's there, you'll see that I'll talk about some of this other information that you're seeing here now. Okay. All right, guys. So I just wanted to catch you up on that because for some reason, the beginning slides, which are very brief, didn't record into the recording that was posted up there. I do want to point out, okay, and I thought I had Canvas open, but maybe not. Let me go ahead and open that. Okay, bear with me while I go through and find my Canvas. Okay. Thought I had it open. Okay, but taking a look, and some of you have already started the quiz, but I want to make sure that you're aware that the quiz is due October 29th. It is currently October 26th. So you got the 27th, 28th, 29th. So you're coming up on the due date for that. So if you haven't taken that quiz, please, start to get on it. Okay, for lack of a better term. The 29th is Sunday night. That's going to close on you. So yeah, that's coming up. Okay, so don't wait till Sunday night, please, to do that. Okay, guys, continue the good work, and I will see you when I see you. Okay. Again, as I mentioned in the welcome video, I am on campus Monday, Wednesday. So if you have any questions, you need to sit down, talk through some things. I'm there Monday, Wednesdays. My class starts at 1:30 to 3:30, and I do have some time after the class. We've been getting out closer to like maybe 3:10 or so. Feel free to drop by if you need to talk to me about anything. It's in room L81. Okay. Okay, guys. Talk to you later.